Hey everyone, and welcome to The Rational Republican, a podcast where we look at complex issues facing us here in Oregon and around the nation. We'll try to address issues from a nonpartisan perspective and view our disagreements through a lens of respect rather than tribalism or divisiveness. I'm James Ball. This is Nick Perlasky.
Hey listeners, how we doing?
Today's podcast is brought to you by ProLift Garage Doors. ProLift is your one-stop shop for residential and small commercial garage doors, from openers, springs, and rollers to full reinstalls. They offer same-day service on all garage door repairs with no extra charge for evenings or weekends. Serving the greater Portland metro area, call today and set up your free estimate at 503-558-6349 or at proliftdoors.com/Portland. Again, that's 503-558-6349 or proliftdoors.com/Portland. On this episode of the podcast, we are honored to welcome Mr. Dennis Porter. Dennis and I worked together when I ran for state representative in 2020, and since then he has gotten involved pretty heavily in the Bitcoin community, specifically in Bitcoin policy and government relations. Is that right?
Yeah, that's right. Good to see you again, by the way.
Yeah, I know. Well, we saw
back
you
in the political scene.
I saw you a couple weeks ago or a couple weekends ago.
Yeah,
last weekend.
We met for, was it lunch, quick drink? Before you met
the
meetup as well.
There was a Bitcoin meetup here in town that we hung out at. So
I've got my background in politics. Kind of came to a head when we were working together in Oregon local politics, and I took a lot of what I learned and jumped into the Bitcoin space. Initially, I just kind of went over there with the thoughts of being a podcaster, being someone that would, tweet about Bitcoin, shitpost about Bitcoin, and continue to drive the conversation forward. Eventually started the show after spending, hundreds, if not thousands of hours on things like Spaces and Clubhouse is where I got my start.
So what's the name of your... Oh, you already also have podcasts. So what's the name of your podcast?
Yeah, my podcast is called Smart People Shit. I also have a side show called The Update for those that are less interested in going on the show that has the curse word. So some of the politicians
I was going to say, probably too late to mention that we don't swear on this show. But
well, I figured. I knew that's what it was called. So
that'll be the one curse word we allow today.
We're going to have to mark this one explicit. So sorry, if you got any kids listening, probably, turn it off.
Trigger warning, yeah. I think that was the point of naming the show originally. Also didn't plan on having politicians or being a political person in the very beginning. Mm-hmm. It was always just, I want to be a part of the conversation. I got involved in Bitcoin in 2017, and I wanted to get into mining, wanted to get into investing into the infrastructure and be a part of that. But I put 20 ASICs in my garage, and that was the cap that the significant other was willing to deal with. Anymore we're ending the relationship. So I decided that I would not fulfill my dreams of becoming a mass-scale miner. Took some years off, just kind of laid low, kept my eye on Bitcoin, got into politics separately from Bitcoin. But now this pretty big fight that's picked up because of what's going on with the infrastructure bill recently. So they tried to pass this crypto tax reporting amendment, which basically
was part of the infrastructure bill.
Yes.
And I think it actually did pass, didn't it?
It did pass.
It was part of the infrastructure bill. So, go ahead. No,
you're good. So basically what happened was during the infrastructure bill process, the Treasury snuck in this bill, or this amendment, that would give the ability for the government to redefine large swaths of the Bitcoin industry as brokers. And under that definition, they would have to report any sort of customer information to the IRS, which is impossible with Bitcoin, right? Because there's no third parties. There's
probably a good time to ask, what is Bitcoin? Like, is it
way up.
Money? Is it a computer thing? Is it all of the above?
On a very basic level, the reason why Bitcoin was created is because we have a very significant problem with money, not only in this country but all over the world. For 10,000 years, human beings have been using money as a means to speed up economic activity, right? Because back in the day, you'd have to trade a cow for a chicken. But what if you needed seeds and the chicken farmer didn't have any cows, right? So you would have to go multiple steps in order to make the transaction happen. Mm-hmm. Eventually, human beings fell on this idea of money. Most people believe it started off as a ledger. So instead of trading physical objects, you'd go in the cave and be like, okay, I owe this guy 1 cow. And then you'd go, a week later, you're like, okay, I owe him 2 cows. And you would keep track of things that way. But eventually we started using items to as a form of money.
I know. Good book on the subject is "Ascent of Money" by Niall Ferguson, a conservative economist. If anybody's, we got to start our like Rational Republican book club or something like that.
I was going to say Debt by, and I forget the guy's name, but
there you go. Caught you on the spot there. But so we've got money, we've got a mint, we've got a treasury, we've gotten off of the gold standard, and now in the last 8-ish years, there is this thing called cryptocurrency, and is it a more efficient way of managing money, or?
So going back, like, yeah,
it's the opposite of efficient, actually.
It's right in line with the next part of the story when it comes to money, which is that for the 10,000 years that we've been using money, we've had this really bad problem where eventually the type of money we're using collapses or gets crushed to the point where it becomes unusable. So for some countries, such as those in some of the African nations during the slave trade era, what ended up happening that caused an exacerbation to the slave trade and to make it so much worse than it should have ever been was that during that time they were using what are called glass agri beads as a form of money, because glass making was a primitive technology in African nations at the time, and the Europeans had pretty advanced forms of glass making, so they came down and essentially debased their currency to nothing and used it as a way to buy human beings. So not only did it totally destroy those nations, but it also allowed one of the greatest evils to occur in human history, which is the transatlantic slave trade.
Well, let's back up just a second. So in order for it to be money, I think there's three things it needs to be. It needs to be scarce, it needs to be divisible, and I forget what the other thing is. But
it needs to be portable and highly identifiable.
Right. So
fungible.
The issue with the beads is once you throw in modern technology, they're easy to make, and so they're essentially easy to counterfeit. Mm-hmm. So what we as America did for a long time is we had the gold standard. Every dollar was essentially you could go trade it in for a piece of gold or a piece of silver. So even though you're carrying around notes, those represented gold and silver. Now they don't represent anything. They are just the promise of the U.S. government to, that you can use them to repay. Right, fiat currency. The government can print as many as they want. So there's really no scarcity outside of the Federal Reserve and the printing of money. Bitcoin, there's only 21 million of them at all ever, and so sorry, go ahead.
The scarcity is a very you
I'll
bring
stop
up
talking.
No, you should interrupt me whenever you need to. It's the scarcity is a really important aspect to money. Natural money is eventually where we headed towards, which is this idea of silver or gold. So silver and gold become very popular because you couldn't quickly debase it. You had to actually physically work to bring it out of the ground. And that was a massive improvement over the types of money like beads. We used fabric. There was all sorts of shells and rocks that we would use. And eventually, we all, as a human species, coalesced around precious metals. And they became one of the soundest forms of money for a very long time because of that. Eventually, though, commerce started to speed up and started to become international and started to become global. And gold and silver had this really big problem where it's heavy, it's hard to store, and it's hard to transport. And so that made it very difficult and became a restraint on commerce itself, which is why we ended up creating paper money, because it was a solution to that problem.
I remember reading something about how, it wasn't just the U.S. that was denominated in gold, but other countries. And so they would, in order to settle their debts, if you had, Swiss francs and German Deutschmarks and U.S. dollars, at some point it would imbalance themselves. And the way that they would rebalance all their ledgers is they would physically put gold bars on ships and sail them across the ocean. Yep. And so the U.S. Treasury would grow or shrink depending on how to fix international trade. Which, because you can't, it's not impossible to trade dollars for Deutschmarks, but it's when they're both denominated in gold, they're really it's really gold that you want, not the other currency.
Yeah.
Although now, fast forward 100 years, and we are just transporting dollars around the world, and
sure.
China owns our debt, and we own China's debt, and everybody owes everybody else, and so this is one of the skipping ahead. One of the interesting things I think about Bitcoin is that you kind of take this entire cycle of debt, and it becomes almost impossible to sustain. Our world runs on debt, and I don't know how you fix that, or like I don't know that Bitcoin fixes it. Bitcoin throws a giant wrench in our whole system of debt and repayment.
So how and why is that?
Well,
and this kind of gets back into what Bitcoin is and how we use it.
So there's only 21 million Bitcoin
okay.
at all ever. I guess you could potentially borrow Bitcoin, but it wouldn't be real Bitcoin. It would be an IOU for Bitcoin. Whereas, so I mean, the way that our fiscal monetary system works now, if I want to go buy a house, it's worth $500,000, and I don't have.
Where are you buying?
And I don't have. I'm thinking 50,000 because that's about what Bitcoin's at right now. Is I was thinking 10 Bitcoin.
It's on sale.
So I was thinking about easy math because Bitcoin's about 50,000, and so I was thinking 10 Bitcoin, $500,000. I don't have $500,000 cash, so the way I do it is I borrow from the bank. The bank is a fractional reserve system where they don't need to have $500,000 in the bank in order to loan me $500,000. They borrow from the Federal Reserve. The Federal Reserve then prints money to act as collateral for this loan that I took out to buy my house. If you all of a sudden the government, the Federal Reserve, no longer has the ability to print money, if they don't have 10 Bitcoin sitting in the treasury, they can't lend it to the bank can't lend it to me, and I no longer can buy that house because unless there's some sort of...
So, I mean, you're really diving into really one of the biggest problems that we've created for ourselves in the modern economy, which
right,
is
like I said, I'm jumping way ahead.
Yeah, which is that, we've created a situation where we debase the money at such a continuous rate, and we're lucky and fortunate to live in the United States where our currency, our fiat, is the strongest of all currencies. But we created the situation where we've been slowly boiling ourselves to death, like the frogs in the pot. And now what we've done is we've actually shattered the socioeconomic ladder in this country, and that's why things like the American dream are not possible anymore, because home prices have gone up so rapidly because the currency itself is such a shamble that it's better to store your value in something like a home or in something like a FANG stock. And that's also why you see this rapid increase in value with the stock market compared to the dollar. I mean, if you go back, even though gold has been manipulated significantly by the paper markets, by the futures markets, by central banks themselves to keep the price down, it's more or less it's been demonetized to a certain extent. If you go back, though, you used to be able to buy a home on the average person could buy a home with 2 to 2.5 years of salary. I mean, now that's like insane. Like, here's the issue: is that you should never have to borrow that much money to buy a home. Like, the home shouldn't be that much expensive. The home itself is a depreciating asset, right? Like, the property is really what's valuable. And the reason why it has gone up so much in value is because that's where people have begun storing their wealth. And not just us, people
just
from all over the
live
planet.
in.
Like, we have one in the United States in particular. It's a very difficult problem because what we've done is we've created one of the strongest real estate markets on the entire planet that's defended by one of the most strongest military on the entire planet, which means that not only is your property going to maintain its value, the likelihood of you maintaining your property rights is very strong as well, which is something super, super important, right? That's why we have the military, ultimately, is to defend our property rights.
Property rights, yeah. Although Black Lives Matter people will have an issue with that.
I mean, there's all sorts of people around the world. I think this is the issue now, too, is like we're boiling the pot, and people are getting angry, and they're realizing they'll never be able to get ahead, and so they've given up. And now we're starting to see not only are they giving up, but they're starting to point fingers. And this is when you start to have revolutions that occur. And that's why we're starting to see people get really angry in this country. That's why we're starting to see riots. That's why we're starting to see groups of people say, you should be giving to us. This call for things like reparations is because you have something and I don't. And there's no way for me to get it other than to take it from you. So that's why I think, to me, it's so important that we do get back to some sort of a sound money standard where the average person can get ahead. The impact, real quick, though, of debasing the money is not just inflating the value of these assets. You're also debasing the wages and debasing the savings of the average person to an extent where it's virtually impossible for them to save for college, save for a home, or save for retirement. And that's why people have given up and have decided, I'm just going to live on the system for the rest of my life.
So, and it's interesting because I myself am not a cryptocurrency or a Bitcoin expert, so I want to make sure that we keep this somewhat in a public policy lane of a podcast. But I feel like that's an interesting thing to have hit on because there has been, both on the right and the left, a marked increase in populism, in finger pointing, in anger, and in blaming the other guy. And I think there's a lot of contributing factors. We got talking about 24-hour cable news cycle at a happy hour on Friday night. I think that's definitely been a problem. Social media has definitely been a problem. But I think that you're absolutely right, is this is one of those, it used to be the case where a person working an average job could afford an average place, and you didn't need to worry about incurring all this debt in life. And now that's no longer the case. The gross amount of inflation that we've seen, not just certainly this past year. We're recording this at the beginning of December of 2021, where we've seen inflation is 6 or 8% or something this year.
Well, it's probably much higher than that, because the numbers that they use to track CPI are constantly changing. The model that they use to change is always adjusting. If you actually go back and use the model that was used originally in the 70s or 80s, the current levels of inflation are up at least at 10%, if not at 15%. There's companies like Shadow Stats,
probably very
Chapwood
valid.
Index,
certainly, yeah,
that
and there's
track
definitely
these sorts of things.
Definitely a lot of inflation that's been going on, and to a pretty massive extent. But even beyond this year, in the past 5, 10, 20 years, especially, certainly when it comes into the markets, and B, the real estate market. So I get to ask a public policy oriented question: is if we keep seeing, in your mind, if we keep seeing inflation like this and people moving and people storing value in things other than dollars, do you feel that does that portend a continued rise in candidates like Donald Trump on the right and Bernie Sanders on the left?
I think that what's happening right now is we're noticing that everybody is really pissed, and they're pointing fingers, and it's for all the wrong reasons. Really, the ultimate reason why everything is broken in this country is because of the money. It's all downstream of the money. People like to say it's downstream of culture, or culture is downstream of politics. But from my perspective, it's all downstream from the money. When you start to break the incentive structure in society, which is that I'm going to pay you $100 to do this thing, and then 3 months from now, that $100 goes down in purchasing power. It impacts you psychologically and makes you say, okay, not only do I not want to save this money at all, I want to make sure that I'm buying other things that will go up in value. So you're always thinking of ways to protect yourself, which is actually also causing a psychological impact where not only do you need to work a job, you rationally need to have some other way to protect your wealth and grow your wealth outside of just that job. So the process that they've done to debase the money has also led to this creation of an entire investor class of people, which none of us should be worrying about investing our money. We should be able to store our value in a money that holds its value over time, which is the definition of sound money, and not have to go out into the stock market, not have to go to the real estate market, and be able to focus on our work. We should be able to focus on our work, and we should be able to focus on work that brings us the most, whatever we're passionate about. What are you passionate about? You should be able to go out and pursue that work.
Well, as a financial advisor, I'm passionate about investing, so I strongly disagree that people shouldn't need to be investing their money, but that's a whole nother conversation.
Nick and I both have degrees in finance. So
but as far as the stock market is concerned too, though, it's like, if you look at it and you track it in gold, it's relatively flat for the most part. The reason why people feel like they are making gains on the stock market is because it's being compared to something that's being debased on a constant basis.
Well, and yeah, this past year has been a great example of something like 40% of all dollars in existence were printed in the last 18 months.
Right.
Like the money printer is legitimately out of control at this point. But I was just going to go back and something you were talking about, the monetary system, inflation, all that. Ever since 1970, was it 71 or 73 when we got off the gold standard? 71. Ever since then, the purpose...
real quick before you go on, but by the way, I won't say the curse word, but it's WTF happened in 1971. It's a website. Anybody that's listening should go check it out, because you can see all the charts, like everything, economic output, GDP, like the individual contribution to the economic progress in the society. And like, it's just 1971, everything's like normal, and then everything just goes like this, like off the chart. So go to that website and
exponential growth since 1971.
It's crazy ever since we left sound money.
And the reason, well, what they did is they moved away from sound money toward a steady inflation rate. The goal was 2 to 3% inflation rate, because they figured 2 to 3% is not something that people will recognize. They won't feel it on an annual basis, but it encourages people to spend and invest rather than hoard. And so, you go back, they were trying to avoid what happened in medieval Europe, where people had sound money and they just locked it up in their safe forever. And then you had all your peasants that would live around the castle who would do all the work on borrowed land. And so they were trying to avoid that sort of thing.
So there's two big things there. One is that
I'm not saying it's a good system. I'm just
it's like a mild form of stealing from your own people is okay because they're not going to complain about it. It's essentially, the argument that Keynesians make. It's like, okay, well, it's okay to rob from our own people and reallocate capital because it's going to force people to spend more money and drive the economy. And to some extent that claim is true, but it doesn't any more forgive the fact that they're robbing from their own people. And also causes an extreme misallocation of capital because now you're basically forcing people to spend their money. And that's why what contributes to some of these boom and bust cycles, because people have been misallocating capital for so long that eventually you have these cracks that form and these problems that come about. And now we've gotten into this world where every time the levee breaks, instead of going, okay, 1971, we're going to pull Volcker, we're going to take the medicine, and we're going to, drop in, or we're going to raise interest rates through the roof. We're going to curtail printing money completely. We've done the opposite of that. We've jacked the printing up and we've dropped the interest rates down. We did that in 2008 and we haven't recovered from that. And now we're going into another cycle of that and just incredible rates. Also, the real quick, the comment about sound money standard and the dark ages. If you go back and look at history, most historians would at least partially contribute the transition from the Dark Ages to the first Renaissance that we had. Well, the only Renaissance. I think we're about to go through a second one. But the Dark Ages to the Renaissance is partially attributed to the fact that there was sound money. So during the 1600s, we had the gold florin. And the gold florin was the longest standing sound money, essentially fiat, which was a currency that was created by the nation state. And it lasted for over 100 years. And during that period, we had some of the most incredible advancements in math, science, literature, philosophy, you name it. And a lot of the stuff that was developed during that time period, a lot of the math and science that was brought about because of that sound money period is the basis for the society that we currently live in.
So I'd be curious so first off, Arthur Burns was the Fed chair in 1971. He said Alan Greenspan or Paul Volcker, and I was just like, that doesn't sound right. He was later than that.
Volcker was the one that he came in and jacked rates up, and
he came in way after that, but he wasn't there when the country went off the gold standard.
Oh,
but I'd also be curious because I don't dispute that at all.
Yeah, was it in the 70s though? I think
yes.
It was in the 70s,
yeah,
but it wasn't
Volcker
71.
Correct,
you're right.
Yeah. But I believe that you're right in that there's been a lot of bandwidth for a lot of scientific advances during a lot of the 15, 16, 1700s. I feel like it wouldn't be difficult to argue that the scientific advances of the past, I guess now 50 years since 1971, have in many ways built upon that, but have far outstriped that. So I don't know if it's necessarily fair to say scientific advances come from sound money policy.
So the thing that sound money does to society is it allows us to plan much further into the future than we would be able to normally, because it creates a level of stability that enables the average human being to say, I know that this money will have value this far out into the future. It gives you a very accurate way to depict how long that money will protect you.
Not untrue.
And when you do that, it actually, in my opinion, unlocks the human brain to an extent where you can begin to say, well, now that I know I'm secure for the next 10, 20, 30 years, I can focus on something that I'm very passionate about. And throughout history, we've seen when the average human being is unlocked to that capacity where they can focus on the thing that makes them, really get up and want to go in the morning, they typically deliver the best results. They typically deliver breakthroughs. And that's why I think that sound money is so important, because if you deliver sound money to the entire world, now you're unlocking the creative process and the ingenuity of billions of people. Right now we live, I will give it to you, we've had some technological advancements, but most of the technological advancements that we have today are because we are robbing from the future. We're actually pulling value from the future and giving it to ourselves now. And we've been doing that since 1971, and we've run out. We can't borrow any more time from the future.
So I feel like that's interesting because very respectfully, I would completely disagree. I think the thing that makes people the most creative, the most able to unlock the potential is an absolute lack of security, is a need to be driven to go out and create more and do more and earn more and contribute more. And I feel like you see that all the time in pick your favorite line of work. Is if you know that I need to, if you're Mark Zuckerberg, I need to invent the next new thing, and I have this idea, and we're gonna go from hotornot.com for Harvard dorm room people to now it's a multi-billion-dollar company. Otherwise, they're gonna kick me out of school, and I'm gonna be the laughingstock, and I'm gonna have all this debt and no college degree and whatever. I feel like the lack of security is what really gets people driven. I feel like if I had security for the next 30 years, I'd just, I'd hang out and drink more cocktails and keep watching the Steelers lose and not really think about too much.
I think to a point, because going back to what I was talking about back in medieval Europe, you had the haves and the have-nots. The wealth inequality was so great that you either had a castle and servants and Downton Abbey style, or you were a peasant and you had nothing, and there was no innovation coming out of the peasants. You had innovations happening, but it came from the rich and powerful because everybody else was just struggling to survive. I think to an extent, maybe it's an interesting point you made. I haven't really thought about it too much, but if you look at the most successful people in our current age, a lot of them were were more on Dennis's side, where they had their parents had money. Maybe they weren't like super rich, but Elon Musk's dad owned an emerald mine in South Africa. Like, he had money. Phil Knight's dad was a sports reporter here in Portland and had plenty of money. When Phil Knight needed $5,000 to go start his first shoe, dad cut the check and $5,000 in the the 70s is a lot more than $5,000 now.
Sure is.
But he had family to help him out. You look at, Bill Gates was able to have access to computers at a young age because of his family situation at the time. It's not people who were not well off. It was and maybe upper middle class, but it was not people that were struggling who made these.
Is it that you are financially able, or is it that the money that your parents have a prior generation before buys you the resources over and above what the next individual has?
You don't have to worry about to be creative. You don't have to worry about your surroundings. You don't have to worry about where your next meal is coming from or where you're going to live or those sorts of things. And a lot of that happens from your parents.
So you named three people who came from
just
decent,
off the top of my head,
very good financial situations. One who was not. I think Bill Gates was more of a right place, right time kind of person. I don't think his parents came from this fabulous wealth, like the level of. Mark
And I'm saying
Zuckerberg
it's not.
Musk.
It's not millionaires, but it's comfort.
We definitely have stories, and we know of people that have come from very difficult and hard situations, and the people that overcome those sorts of difficulties tend to be some of the most successful. Look at what happened with Oprah, and for instance, that she just had all of these horrible things happen to her, and she overcame that, and now obviously, household name, right? There are stories like that, but on average, most people that are in bad situations that grow up in a form of economic oppression, not only in the United States, and we're being economically oppressed in the United States is like being, in the 1% in some other countries. So if you just look at it from a global perspective, trying to escape the reality of living in a country or under an economic regime where the money that you earn is going to be worth much less in the future puts you in a situation where you're just fighting for survival. And that's when the Maslow's, hierarchy of needs kicks in, and you basically can't get to that next level on Maslow's hierarchy of needs because you're just down here at the bottom trying to survive. And some people do break out, and I think that we've seen that time and time again, and those tend to be some incredible stories that I think motivate a lot of us to believe that this is possible for anyone, but it's just not realistic when it comes down to the data. Most people do not break out of those sorts of situations. And as you said earlier, the average person who has that leg up from a parent, that's a huge difference for most people. I mean, it makes an incredible difference. That's why most parents struggle and try so hard to make sure that their kids do have that leg up, because they know that if you have that leg up, it increases your chances exponentially of hitting the next level and doing something truly incredible with your life.
Yeah. Going back to sound money, but this is this is another thing. I was listening to your last podcast with Pete Rizzo, I think, and so I don't want to reference that too much because most of our listeners probably aren't familiar. But talking about the future of Bitcoin, and if Bitcoin as this sound money, we're talking about it kind of in theory, but like in practice, I think the goal of a lot of Bitcoiners is to replace the US dollar as the global reserve currency. Is that...
So, I mean, there's mixed opinions. If you go on Twitter, you could see pretty much a large swath of individuals will say they believe that the US dollar is going to be destroyed by Bitcoin. At times, I've even been someone that supports this idea. But as time has gone on, and as some of the more robust technologies around Bitcoin and crypto, and when I speak about crypto in this instance, I'm going to speak specifically about stable coins. I don't know of any other project outside of Bitcoin or stable coins that has a use case or will go on to be used far into the future. Maybe it has some theory of a use case, and maybe some people are trying to use it that way. But for most part, I see a lot of that coming towards the Bitcoin ecosystem. I could get into that, maybe that ruffle a few feathers, saying I don't think that all the cryptos will survive, but we can get into that on another episode. When it comes down to it, though, because of the way this technology is created, it allows anyone all over the world to have access. For the first time ever in your entire life and in human history, you can choose the money that you want to use. So most people have been given this opportunity to use Bitcoin as a form of money. And the predominant use case for Bitcoin at this point is to use it as a store of value, and as I would say, almost
say speculative asset.
A speculative store of value is a nascent form of store of value, so that not only is you storing your value, but it's going to increase significantly over time because you're an early adopter. It would be like if gold, imagine it's like if gold itself got dropped on the planet and there was everything else around it, all the other money was crap, was total garbage. And the early people that realized gold was going to be valuable would start buying it and get a significant amount of appreciation in the underlying cost that it took to buy the item itself. That's basically what's happening with Bitcoin. It got dropped on the planet, and whoever figures out about it first gets the first opportunity to dive in and to buy this incredible store of value, this incredible money. So yes, it will go up in value. Typically, sound money doesn't fluctuate in value too much. So it's more of a recognition that it's going to be a stable form of a stable asset, most people would say, in the future.
So that's also a fair question I'd be curious about. Obviously there was no ship from the heavens that dropped this thing called Bitcoin down on us, but is it a physical thing? Can I hold a Bitcoin, or does it exist on a computer? And how are there only 21 million of them?
Bitcoin does this Bitcoin is a great question. Bitcoin does this incredible thing where it actually eliminates the physical nature of money. And that's a good thing. Everything that around you, everything that you know of in the last 20 years has been digitized. We've been digitizing videos. We've been digitizing photos. Everything has been getting digitized. And they're trying to digitize, everything now going to VR and these virtual reality worlds, mm-hmm. right? But now we have fully digitized money. So we've taken away this drawback of money, which is the physical aspect. Some people are like, well, I want to touch it. I want to feel it. Touching and feeling it is a drawback. Not only can I now transmit my money all over the planet virtually for free and instantly, I can also store it for free and in a very, very small space. Like, you want to store $100,000 worth of gold at your house. I mean, not only are you going to have to buy a $10,000 safe, you're going to probably have to get some insurance on it, and you're going to have to, it's going to take up a significant amount of room. Whereas I can store billions of dollars of Bitcoin at my home for free and take up no space. Exactly. Yeah. So taking away the physical nature of money is a good thing. I know that it's a difficult thing for a lot of people to grasp, but really, when is the last time you got paid in physical cash? Yeah. Like, when was the last time someone handed you $2,000?
Physical currency hasn't really been a thing for 20 years, 30 years.
So this is a good thing. You're essentially getting all the benefits of gold and all the benefits of digital money at the same time.
So just to kind of explain a little bit further, it's a distributed ledger. So it's not there are no coins that you put on a thumb drive. There's no file that you have that says I have this many Bitcoins. It's there's a ledger that's held by
everyone.
Thousands, tens of thousands. I don't know
Anybody who wants to
holds this ledger, and that ledger, says Nick owns 0.1 Bitcoin.
Come on, you could have given me one. It's hypothetical.
You didn't even give him a whole coin.
Nick owns 10,000 Bitcoin.
Yes.
And through cryptography, that same transaction is added on every ledger around the world. All of those individual ledgers all say the exact same thing, that Nick owns 10,000 Bitcoin. And so if you want to spend that, you then add your entry to the ledger that says Nick gives Dennis 1 Bitcoin. And then as that gets included in that ledger, now you can go back and say, well, Nick had 100 Bitcoin or 10,000 Bitcoin, and then he gave 1 to Dennis. So now Dennis has 1 and Nick has 9,999 Bitcoin.
Mr. Finance MBA from you.
I'm doing this stuff
Paid a lot of money for that education.
Right.
Came in handy finally.
I'm making numbers up on the fly. So it's not, there's nothing that said, like, you don't ever hold those 9,999 Bitcoin. It's in the distributed ledger that says, okay, you own this. Mm-hmm. And he owns 1. And so you take your wallet and you add and subtract all of the different transactions over time, and that's how many you have at the end.
And so when I mine for Bitcoin, I then get to go on and say I found one and put it on the ledger, or what? How is it determined that I've found one?
Yeah. So if you mine Bitcoin and you find a block, what you do is you take 1 megabyte worth of transactions, which that you would have been broadcast, and you take you add that to the ledger, plus, was it 5 now? What's the 12 and a half?
Oh, it's 6.25 right now.
6.25. It's so, and you get, and plus Nick gets plus 6.25 Bitcoin. So every block that's found adds 6.25 Bitcoin. And then every 100,000 blocks, I forget, 10,000?
Oh, yeah.
1,000.
I don't remember the number, but it gets cut in half.
It gets
roughly every 4 years.
Roughly every 4 years. So a block is found roughly every 10 minutes. So every 4 years, whatever that math ends up being, the block reward gets cut in half.
So we're doing 900 Bitcoin a day right now is how much is mined.
Right. And so eventually in the year, probably, I think it's 2140.
That's it. Yep.
The last Bitcoin will be mined. And at that point, the block rewards are going to be minor fractions of a Bitcoin. When it started, it was at 50, then it went to 25, then 12 and a half, now 6.25.
Where does one find a block?
So this is a cryptography system. Are you familiar with hashes?
I'm not.
No. Okay. So basically you run this complicated thing on your computer, this calculated algorithm. And it's the same way that they store passwords, basically, where it's a one directional algorithm. You take 2 + 2 = 4. You can also say 4 = 2 + 2. But these cryptographic algorithms only go one direction. You can say 2 + 2 = 4, and I can check that 4 equals 4, but I can't take 4 and reverse engineer that into 2 + 2. I don't know exactly how that works, but that's
to keep it like really simple, just because the average person,
I'm breaking that.
You're going to give him like
far.
the like cryptography 101 and like that.
Sorry.
If people want to learn about that, they should go dive deep into it, because I personally, even it's way over my head sometimes. I mean, the math and the cryptography behind this.
So you run this algorithm as many times as you possibly can. If you get the right answer, which you can't go backwards, you can only go forward. So if you happen to guess the right answer, you win the block.
Yeah.
Cool.
Basically.
So it's just a giant game of guessing. There's like billions or trillions of guesses occurring all day long in order to ensure that you basically find that block and get that reward. But there was something though really important that we did kind of skip over earlier that I wanted to touch on, because I think it's really important, especially for people that would be listening. And it's this idea that Bitcoin will replace the dollar. I don't see Bitcoin as a direct threat to the dollar in the near term.
Oh, I do.
I see it as a direct threat to being a store of value. So all the things out there like gold, for instance, which I don't think it's going to eliminate gold. I don't think it's going to eliminate silver. But when you go into this inflationary event that we're occurring right now and into the future, more people are going to end up choosing Bitcoin. So I think the future value that is created through inflation will be distributed through Bitcoin stronger than all these other forms of sound money that are available to human beings today. But when it comes to Bitcoin versus the dollar, there's this really interesting thing that's going to happen, which is that because of the permissionless aspect of this money, so permissionless basically means you don't have to ask permission, just like with cash. I can hand you $100 right now and no one could stop me. Same thing with Bitcoin. I can send 1 Bitcoin to anyone on the planet and no one can stop that transaction from occurring. The same thing is about to and is occurring with stable coins. So a stable coin is a 1-to-1 peg of US dollar to basically a cryptocurrency, right?
Yeah.
And one of those is there's Tether, there's USDC, there's a bunch of them out there that are available, different types of products.
MakerDAO.
Yeah, there's a bunch of them, right? What's going to happen as people figure out and wake up to the reality that, oh, I don't have to store my value in my local fiat, which is a very big problem in a lot of different countries. For instance, in Turkey right now, the lira is just falling off a cliff. And if you were to tell someone, hey, you can take all your lira and convert it into US dollars, they're probably going to do that. So as this technology strengthens and broadens across the globe, it is actually, in my opinion, going to push the dollar across the globe as well. So in the near term, the next 10, 20, 30 years, I believe you will see a very strong increase in the usage and the demand of the dollar and the availability of the dollar to people all across the planet. And then Bitcoin and that world will collide, right? So you'll see the dollar go up and people will realize, oh, what's this thing that I always see tradable for dollars that's always going up over the long term compared to my stablecoin dollar? Maybe I should buy some of that for my savings account.
So without getting too deep, too opening of the can of worms, I think there's a problem with stable coins in that you're essentially decentralizing the money printer. So instead of the Fed being able to print your money, you're now looking at everybody who owns a stable coin can now print that money. And
yeah, that's a short-term problem. So that's something that I think that will be fixed. I think that Gary Gensler from the SEC is going to come in very strongly and regulate the stablecoin market. And that's going to bring a lot of protection and a lot of, I think, trust into the marketplace for using these. Because I do agree that it could be potentially a very big problem where people could essentially just... And people have made this claim that companies like Tether, which may or may not have done this in the past, some people have made the claim that they have printed more Tether than they have in reserves for US dollars.
And that is the can of worms I was trying not to open. But Tether, it's ideally, if you were to have a stable coin, you would need to have a 1-to-1 reserve of US dollars.
Right.
Which means for every USDT that's printed, you would need to have 1 USD in a bank somewhere.
Yep.
What I think some cryptocurrencies have done, and this is the theory with Tether in particular, which is the biggest stable coin, is they are using crypto as their reserves and not actual US dollars. So they're holding Bitcoin or Ethereum or Polkadot or whatever as they're printing USDT. And I'm not convinced they have all that money in the bank in
a lot of people are not
USD.
convinced. Yeah.
And so,
but that's why I hold my money in Bitcoin and not in these stable coins, because I think there's a short period where we will see potentially that something could come out. I think that there is going to be more regulation. I think the SEC is going to step in. Gary Gensler has made it very evident that he plans to make some moves, and I think that that's going to be one of the things that they go after is not only the stable coin market, but there's other aspects. But the one thing that they have not, Gary Gensler actually taught about Bitcoin at MIT. He understands Bitcoin really well, and multiple times he has reaffirmed that Bitcoin is not a security and that he does not plan to come in to regulate it as such.
So that'll be an interesting, again, kind of from a public policy perspective. That's the stated opinion of somebody at the SEC. So we kind of understand where they're at. What does Congress think? Is there a point next year? Is there a point in 5 or 10 years at which somebody on the right or the left tries to make an issue out of the dollar is, drastically continuing to decrease in value? There's a number of other assets, real estate investments we talked about on this earlier on the episode, and now there's this other thing that is highly speculative at the moment, highly volatile, but could compete with the dollar as a store of value. Is there anybody in Congress who's kind of made comments who says we need to either regulate this or shut this down or incorporate this more into, the legislative process?
Oh yeah, sure. I mean, there's people from multiple offices who have made attempts to regulate Bitcoin. I mean, this is the thing that most people don't realize is in this industry, we already have, I believe, thousands of pages of regulation at this point for the crypto industry. So it's not like we're living in some wild, wild west unregulated industry any longer. That's a far and away from that. But there are various members of Congress who see Bitcoin as a potential threat. One in particular is Brad Sherman down in California's 30th district. And that's why myself and many other Bitcoiners are working very hard, very tirelessly to replace him with Erica Rhodes, who is a candidate running there, who's also a Democrat. I mean, you have jungle primaries in California, so he's living in a strong Democrat stronghold, so you have to run as a Democrat in order to win. And there's a real strong chance that she has an opportunity to take him out purely on this one issue alone. Obviously, there are other things, other voters that will get her across the finish line. But that's why I think people are discounting the political movement for Bitcoin significantly in this country. I think, though, you're going to see a strong uprise in the political movement. We've already seen very strong movements by the various players in the industry. CEOs of the different exchanges are not happy with what's going on. And you have multiple super PACs forming to be able to push back, and a lot of money that's about to be dumped into some of these races to make sure that guys like Brad Sherman either stay quiet or get removed from office.
Ted Cruz has made some positive statements about Bitcoin. He's also was trying to get rid of that the thing you were talking about in the infrastructure bill. I'm not sure if he was successful or not. I did not quite up to speed on that. Mm-hmm. Hillary Clinton has made some statements talking about the dangers of Bitcoin, and so it seems to me, I don't know, it hasn't quite formed on party lines just yet, but it seems to be there are Republicans who are more pro Bitcoin, pro cryptocurrency, and some Democrats who are against it. I
think that Republicans were definitely the first ones to jump on the Bitcoin bandwagon, if you want to call it that. I definitely think some of them are strongly pro-Bitcoin at this point. I don't think it's a bandwagon thing anymore. You have Senator Cynthia Lummis, Ted Cruz, a couple other senators. Oddly enough, Ron Wyden is coming out as someone who's been helping to protect and support Bitcoin. I don't know if he directly likes Bitcoin or if he just thinks this is the right thing to do. Not exactly sure, but I've been happy to see him make moves in the right direction, which is an interesting thing for me to be pumped up about some of the things that are politically happening in Oregon.
Senator from New York, there's a lot of finance there.
Yeah. So
joke for our listeners. He's not actually from New York. He doesn't represent. New York.
He does live there, but he lives
there.
Yeah, he has a house in New York.
But we have seen. I think this is the thing about Bitcoin is the game theory always seems to play out. So when one side moves in the direction of saying, I'm going to be pro-Bitcoin, then the other side says, well, I better keep up on this issue, otherwise I'm going to miss out. And we recently saw 10 members of the Democratic Party write a letter to Nancy Pelosi in regards to the infrastructure bill and the amendment, showing their dissatisfaction with the way it was written. And some of the members of that letter writing also joined together in a bipartisan effort to write the Keep Innovation in America Act, which would remove or change the language around the broker definition, which we talked about much earlier in the episode, was what they're trying to do with this amendment, is to label miners, node operators, wallet providers, software developers as brokers, which would mean that they have to report KYC AML information, which I'm fine if you want to report KYC information, but they don't have that information. They can't report it. So under the third-party doctrine, if you get that information, you have to be able to transmit it to the IRS, to the government. When you're when you're sending a Bitcoin transaction, you're not providing the information like your personal information.
Right. Briefly, KYC is know your customer, and AML is anti-money laundering, in case not everybody is Jim Cramer listening.
Yes. But like we discussed earlier, the way that you find a block is you run this algorithm. You find the right answer, and you then reward yourself with 6.25 Bitcoin. In order to do that, you don't have to tell anybody anything about yourself. So where 6.25 Bitcoin right now is worth, $400,000.
Right.
So that would definitely hits any threshold you're talking about for money laundering or whatever. You just created $400,000 out of thin air, and
sure. But you're also a business. That's income. That's considered income. So you would be reporting that to the IRS automatically. That's not something that
Sure.
If you pay me $5,000 to do a job at your house, I still have to report on that as income, right? It's the same concept. And also for those of you that are newer to this idea of Bitcoin that might be listening, is that the when it comes to Bitcoin itself, the ledger is completely public. Like, everybody can see every transaction. So there's not really, if you get into the situation where you're thinking like, oh, I can go and anonymously transmit money all over the globe, it's not possible. So
not with Bitcoin.
It's not. This isn't something that I think people are like needing to even worry about. And all the players that are involved are reporting. And on average, the U.S. dollar is more of a mechanism for money laundering than Bitcoin ever has or ever will be.
To be fair, the wallets are public, but who owns the wallets? Not necessarily.
It's pretty easy to narrow it down, to trace it down who owns them once you get into the habit of using them regularly.
There are ways to figure it out. But like what we were talking about just before the podcast is the creator of Bitcoin, Satoshi Nakamoto, owns hundreds, thousands of Bitcoin. I'm not sure.
He has a million
Bitcoin. No, it's not a million because it's about 5% of the. Oh, I guess that would be a million, wouldn't it? So never mind. Sorry, me and my math is not serving me well today.
Got to go back for the extra classes. Got to catch up on the finance classes.
My thinking on my feet is not exactly what I'm good at right now. But no one knows who he is. You can see Satoshi's wallets. You can see that he has 1 million Bitcoin. Mm-hmm. But as far as the human being who is behind that address, nobody really knows.
Yeah,
and that's if you really want, listeners, viewers, if you want to get down a rabbit hole, look up Satoshi Nakamoto and try to look at all the conspiracy theories around his identity.
There's some fun ones out there.
The guy who owns 1 million Bitcoin at $50,000 a pop is anonymous.
So one of the things, though, when it comes to that probably a lot of people, that would concern them, thinking that there's this guy that may or may not have 1 million Bitcoin, access to 1 million Bitcoin. I think it's been pretty well believed at this point that he's not coming back, that he's either dead or he burned his keys, because the incentive around holding 1 million Bitcoin would be too strong for any individual human being to be able to resist. And so
because it's public, the minute he spends any of those, you're going to just affect the entire market, because all of a sudden it means that you have 1 million more Bitcoin that are available. But
there's also a benefit to the fact that he is non-existent, and that's that he cannot have undue influence over Bitcoin itself. One of the best things about Bitcoin is its decentralized nature. There's no leader, no one has control. We're all equal participants in this network, and you can see the difference between that and a lot of the other cryptos out there that do have very predominant leaders who control and influence the fiscal, monetary policy, and development direction of those cryptocurrencies. Whereas with Bitcoin, it's the people's money. We're all equal participants.
Decentralized and no leader, and anybody can get in. It sounds like the MCRP, if I'm not.
All right. Well, I could keep talking about this forever, but we are just about out of time. So I didn't really give you a heads up on this. I apologize. But one of the things we like to do at the end of our episodes is ask our guests. Normally we ask who their favorite Republican is, but I don't know. We can probably broaden that up if you want to say who is your favorite politician. Do you have a favorite politician?
Yeah, I have a few, but they're not for the reasons most people think. This is a tough subject for me.
Ted Cruz for
my favorite politicians right now are anybody that's a really big Bitcoin proponent. So if you want to earn my vote, I'm a single issue voter. Be super pro Bitcoin.
Right. Jimbo's a politician. He just did a whole podcast about it.
Yeah,
he's your favorite politician.
Yeah. He's on the top of the list right now. He's on the top of the list. So I mean, if that's how it is. So I'm a big proponent of Bitcoiners as a single issue voter block. I think that will potentially be one of the most powerful, influential, and wealthiest single issue voter blocks in recent American, if not all American history, because Bitcoiners have a lot of money and we're extremely economically and morally incentivized to protect and to push Bitcoin forward. So when Bitcoin goes from $50,000 to $5 million per coin, there's going to be a lot of efforts to make sure that nobody ever messes with it. And I think that's when you're really going to see things like this country completely change, which to some extent does have a decentralized government. It is probably one of the most decentralized forms of government, even though it's become less decentralized as time has gone on. Yeah. And that's when you really see the breakdown, right? As you get away from that decentralization model. But I think that we will, to some degree, see many people become more pro-Bitcoin. You already have, I think we're at 5 senators who have been working to defend Bitcoin. And then we have 10 Democrats in the House. And I think we're at like 10 to 15 Republicans in the House that are like either behind the scenes protecting Bitcoin or openly protecting Bitcoin. So there's going to be an inflection point where it's like, okay, once even 5% of Congress is pro-Bitcoin, I mean, it's pretty much game over for enacting negative legislation. Like we can block anything we need to block.
Yeah.
And then it's a window of opportunity. It's a time where it's like, okay, we go from 5% and then we go to 10%. And then now we're making legislation that's like, oh, we'll give tax breaks to Bitcoiners if they stay in the United States. We'll give tax breaks if you mine here in the United States. And I think that's the sort of legislation you'll see. It'll go away from, you won't be pro or anti-Bitcoin, because eventually being anti-Bitcoin will be political suicide. You will have a policy paper on what you think we should do with Bitcoin. No one's pro or anti the internet. No one's pro or anti the economy. They have a policy where they believe we should head a certain direction on how we treat this, the internet technology, or how we treat the economy. So soon enough, it's like giving Bitcoin a thumbs up is not going to be good enough. You're going to have to hodl Bitcoin. You're going to have a legislation that you are crafting to protect Bitcoin and to promote Bitcoin. And then eventually we'll all be Bitcoiners, and it'll just be one big happy family.
Perfect way of saying why James is your favorite politician. Couldn't agree more.
Well, Dennis, thanks again for coming on the show. Really appreciate it.
Good to see you again.
Listeners, we will talk to you next time. Thanks for listening to the Rational Republican podcast. Your hosts are James Ball and Nick Perlosky. The show today is brought to you by ProLift Garage Doors of Portland, serving the greater Portland metro area for all your garage door installation and repair needs. If you'd like to get in touch with the show, you can email us at james@jamesaball.com or follow us on Facebook, Twitter, or Instagram. You can find our episodes at jamesaball.com, Apple Podcasts, Google Play, or wherever you find your podcasts.